It's CoreWeave. It's the largest tech IPO we've seen in the U.S. in several years. It's at the NASDAQ. Christina Partsinevelos is up there with the very latest on when we think this might get going.
If you just look at the people behind me, they're quite relaxed, right? Normally, if it's going to be pricing, there'd be a lot more excitement, a lot more employees. The man right behind me is Jay. He's the IPO execution officer. He acts as the middleman between Morgan Stanley. They're the stabilization agent. Right now, pricing's coming in around $42, oscillating around there. Still way too early to call it. Keep in mind, the offering price was $40, which sounds great. Oh, $2 more, but much lower than the range they were originally looking for, between $47 and $55. So this company expected to raise about $1.5 billion through this IPO, 37.5 million shares. We're going to do the math. But overall, that would value it anywhere between $19 and $23 billion. I think there are definitely some concerns with the debt structure and the fact that they have billions in debt that needs to be paid quite soon. But keep in mind, this is a startup. They started in 2017 and valued at $23 billion in just a short amount of time. They went from, a mining company, 3D video rendering, to now an AI hyperscaler competing with the likes of AWS and counting Meta as a customer. But that debt structure, the customer concentration are really some big weights on this company right now. Also, the timing, right? Is this a great time to go to market?
Well, that's why, there was some speculation as to whether we'd see this day. But we have it, and we will see, and you'll let us know when the stock opens. We'll certainly track it. Christina, thanks. We'll see you many times throughout this day. We know that. Just real quick, you bought more NVIDIA.
I did.
The relationship this company and NVIDIA obviously is tied at the hip. You bought more.
Yeah, I bought it not because of the CoreWeave, but because of my general.
Stock's traded bad. NVIDIA has.
It traded terribly, and now it trades at almost 23 times forward earnings for a stock. I know I do this every time. Growing earnings per share at 50%. That's to me a bargain. Now, if we're going to have a recession, okay, this trade will look poor. However, I've already said multiple times, I think we are doing a retest of the bottom in a correction. It always feels worse when this happens, especially when you retest. If it turns out, Scott, I'm wrong, and this is much worse than a correction, then I'll have to take risk off.
Malcolm, you bought more NVIDIA as well.
I did. I think this is a great positioning point for anybody who's missed this, like myself, to this point, 109, 110. For a company that was up at 148 or so at its most recent high. So we're talking about a severe discount right now at a time when the company hasn't really lost a whole lot of strength. It's lost momentum, sure, but it hasn't lost a whole lot of strength, right? They're still looking at something like a 2-to-1 ratio between receivables and assets on their books. And so until that relationship inverts, that's really the only thing that I would care too much about in the short term as a shareholder.